Hello, and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets and our co-sponsor, Murdoch Capital Partners, we're very pleased you've joined us for our next presentation from Orezone Gold. Before I introduce our speaker, a few points to note. Please submit your questions in the questions box to the bottom left of the slides. Once the Q&A session is ended, don't log out. You'll automatically be transferred into the Orezone booth where you can access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Patrick Downey, President and Chief Executive Officer of Orezone Gold Corporation, which trades on the OTCQX Best Market under the symbol ORZCF and on the TSX under the symbol ORE. Welcome, Patrick.
Thank you. We got about 25 minutes to get through the presentation. It's a fairly detailed presentation because we are an advanced stage development company. And so I'd like to go through it as fast as I can and get you all the information. But it's a pleasure to be on here, and hopefully you'll get a lot of what we're trying to do here over the next 12 to 18 months. It's an exciting time to be in the gold space, obviously, and we are really excited about being probably one of the next development stage projects on the gold market right now. Forward-looking statements. I will be making forward-looking statements, so they're covered by this, and I'll skip right through that. So I took over the company in 2017. We brought in new management. I really looked at this as a staged approach that a junior company could develop. I've been involved and managed a lot of junior and mid-tier companies very successfully through to construction, operation, and sometimes M&A. So I really looked at this as how we could build it. We focused on a project scale that we can finance and build in the current market. We delivered what's called an oxide-only feasibility study. And oxide is really just all free dig, no drill and blast, no crushing, minimal grinding, really simple project, and extremely robust cash flows. And at that point, Resource Capital Funds, which are the preeminent metals private equity fund in the world, joined, and they put in approximately $34 million at that time, and subsequently put in an additional $4 million. So they're a 19.9% shareholder and a very, very supportive shareholder. We then updated our feasibility study with a sulphide expansion. Sulphides are the harder rocks beneath the oxides. There is a very large sulphide, well-defined sulphide resource here, and we really focused on the higher grade ones that really make the maximum profit on the investment. We then raised $20 million more as a next stage to project development, and we're very, very advanced on our debt package. In fact, we have got harmonized term sheets, and we're really discussing the next stage to start construction. Obviously slightly interrupted by COVID, but we're pretty confident we will start later this year. One key thing about us as management, we are very aligned with the shareholders. We have acquired in the market almost 6% of the outstanding shares, and we bought them in the market. So I personally own 5 million shares. My chairman owns 5 million shares, and most management own equity in the market, as do our board of directors. So we are very, very aligned with the shareholders here. We focus on NAV per share, in terms of the development of the project. And we took a staged development approach because we want to reduce dilution to the shareholders. So instead of building it all up front, we build the oxide in up front, and then we build the sulphide in year 2 out of cash flows. So it really reduces the dilution to our shareholders. Our capital raised really goes towards project development. We have a very low G&A cost in corporate. So we keep that really focused on developing the project. And we've done extensive studies. We've got a very technical team. RCF have got a very technical team. Our banks, who are our lenders, brought in a technical review. So we're very confident of the next stages, both in terms of capital deployed and the operating and margins on the gold price. And we did all this at $1,300 gold, and the current gold price is $1,900. So really, really robust project. Like all projects in Africa, or most projects in Africa, we have a resettlement, where we moved some of the local people. It's very, very well recognized and understood in Burkina. There are, I think, 14 operating mines there now. We have a medium-sized relocation. We're complete phase one. We built the villages. We just have a little bit of final cleanup to do. We stopped it during COVID, so we will complete that in August, and we will start moving people then. And everybody has signed up for the move. They're actually quite excited about the move. We have a really robust and excellent location here. There's two companies that own all the ground, ourselves and West African. West African just went into production about 4 months ago, and there's 10 million ounces of measured and indicated resources between the two companies. If this was Nevada, there'd be a gold rush state going on right now. And there's a lot of unexplored ground in between. So we're fairly confident here, and I'll show you that later on, that we can add to our resources and reserves. RCF is a shareholder, and I'll show you later on, we have some of the preeminent mining funds who are shareholders of this company. And every one of them have visited the project. So they're not just taking a flyer on who we are or the project. They've actually physically gone and looked at the project. We're highly leveraged to the price of gold, as you will see. And we're at a very, very attractive point in the life cycle of a single asset company. We're at that stage where we're just about to build. A classic example would be our neighbor, West African, who I spoke about. They were currently sitting around 22 cents in March of last year when they started development of their project. They're up and running, built, constructed within a year, and their share price is now $1.05. So that gives you a pretty good idea what can be done here in a very short space of time. And we've got a team here who have got a lot of experience in project financing, project construction, and in operations, and also in M&A. Being a single asset company is not really where you want to be in the mining space. So we intend to be part of a bigger entity or grow the company ourselves. We really are not, as long as we get value for the shareholders, of which we are, big shareholders, that's what we care about. But we will look for growth as we build this project. A little bit about the team. Mark Humphrey, who's the guy who built this project, just come off a very successful build in West Africa with RCF as a shareholder. Ian Chang with VP of Projects for Fluor, just come off an extremely successful build of a project called Pretium in Canada. The team itself, like Steve Axel and Joe Conway and Kate Harcourt, all very, very experienced directors in projects development and execution in West Africa. So we've got the team here who can build it, who can do M&A. I've done many successful M&A transactions. The top 5 are ones I've been involved. The top 6 are ones I've been involved with over the past 7-8 years. All been very successful, both for us and for the entity that merged with us. So a team that can build it and a team that can grow it. Burkina, if you don't know anything about it, is a very established gold country in West Africa, landlocked. 14 mines built. 2 have been built in the past 2 years. Highly successful projects. One is Wagnon for Teranga, and the other one is Sanbrado for West African. And Endeavour, which I think has got a market cap right now of $5 billion, is got very, very focused in Burkina. Highly successful projects in the area. The same with AM Gold and Essakane. So this is an area that you can build and operate in. There are some security issues. We all know about them. You're in the Sahel. Mainly focused in the north and the east. We are not near them. We have never seen anything. We are in a very secure location. And in fact, Sanbrado, which is right beside us, was built and commissioned and running during that period of time very, very successfully. So we're ideally located. We're a 90-minute drive from the capital on a paved highway. Very ease of security, very, very, very good logistics, an ideal place to build an operation. Bit of a closer map here. You can see the project, you can see the capital, 2 paved highways, by the way, to the project, power line 135 kV, about 12 kilometers from the project, water right on the project. That's one thing that a lot of projects don't have, but we do. There's a river that runs right by the project, and we can harvest water from that without having to put major pumping and pipeline systems in place. Mankato, the nearby town of about 20,000 people, will be one of the major centers for labor. We don't have a big camp. We will not have a big fly-in, fly-out operation. So pretty simple operation going forward. Economics, done at $1,300 gold. The 2.5-year payback, which includes the capital for the sulphide expansion, $361 million NPV at $1,300 gold and 44% IRR. At $1,750, that goes to $732 million, 88% IRR, and a 0.9-year after-tax payback. So a very, very attractive project. 13 years of mine life, and we think we can grow beyond that. And in fact, we think we can expand beyond that, and I'll show you that later on. 1.6 million ounces of gold production. We're sitting on a 5 million ounce M&I resource. So again, we've got very, very good reason for growth here going forward. Upfront capital, a modest $153 million, simply because contract mining, no major water systems to put in place, very, very central location, no crushing, minimal grinding, fast leach kinetics. So a very modest capital to get up and running. And then the sulphide expansion comes in year 2 at another $63 million. We did that based on $1,300 gold. Obviously, that readily pays itself back during that period of time. And where is the value proposition? Well, right now we're sitting at a total enterprise value in reserves and resources at $54 and $20 respectively. The projects around us, some of them actually increased on what you've seen there. None of them are permitted. They've got high capital costs and they're a longer time frame to development. The ones you see to the right-hand side are either, like us, advanced or financed. Orla mining, financed and being built. You can see where it has gone. Bluestone, not yet financed, but got a lot of its finance in place. You know, quadruple what we have under a smaller resource. West African, which was built right beside us, you know, it's 8 times what we are today. So there's an incredible value proposition here for this project moving forward. Again, the market cap to NAV, very, very good indicator of value. Again, the ones to the left of us, none of them have permits, and they've got a way longer time frame to production than we have. You look at Bluestone, Pure Gold, Victoria Gold, which I was involved in, WAF, which is next door to us. You can see the market cap, the accretion that we should have as we build this project over the next 18 months to 24 months. And we're sitting at that bottom of the curve where, you know, we had great exploration success. We're in that period now where we're about to go into construction. And we expect a re-rate. We've completed our RAP, and that will be finalized in August. I think when we announce the project financing package, that would also be a very, very good value upside to the project. The resource estimate and project economics will be updated later on, and then we'll start project construction and commercial production. Again, great catalyst for value going forward over the next 18 to 24 months. And we just done couple of little charts here of 4 projects as single asset companies like ourselves that we're comparing. That what happened to the share price over the period of time when they went through construction into commissioning. And you can see on average 125%, in some cases greater since then. Pretium, which one of our guys was involved in, Rocks Gold, which our team was involved in, Atlantic and West Africa, which is right next door to us, all have seen a significant shareholder value accretion over that period of time. And we expect to see the same as we go into construction over the next 24 months. People ask about the capital and the risk. West African and Burkina in particular, we've taken the last several projects. You know, we have not cherry-picked here. They've either come in ahead of schedule or on schedule, or under budget or on budget. There's been no cost overruns. They haven't gone back to the shareholders looking for more money. They've not had to renegotiate their debt. They've all been built and built very successfully. And there's a number of reasons for that. One of the key things, and we have the same, simplicity. very flat topography. You don't have drill and blast or to make your earthworks for your plant. It's just basically scraping the top of a laterite and starting to build concrete foundations. Simple logistics and well-established logistics in Burkina, and a rapid construction timeline. There's been 14 projects built in Burkina. Most of the people who build them, such as concrete pourers, rebar benders, steel erectors, tank erectors, etc., are all locally skilled people. You're not bringing people in from other parts of Africa or the Philippines or other parts of the world. That's not what happens here. They're all local skill sets in country. We're standard truck and shovel, contract mining, pretty simple. Very shallow pits, average depth of 45 meters. In most pits in mining are around 300. Our average depth in the oxides is 45 meters. That adds to the value exception because you'll have short hauls and not big uphill hauls. Low pit maintenance because it's not drill and blast in the oxide. CIL, low work index, which is power related. We don't have a big power cost here. Most projects have a work index of 14 to 18 kilowatt hours per ton. Ours is 3. So way less power consumed and very fast leach kinetics. So we get the gold quickly. Project is very large. I don't want to go into the geology, but very large here. So we locate the process plant in the middle. We locate the TSA or the tailing storage facility in the middle, and we haul from either side. So short hauls at the start, medium hauls at the end, lots of pits to operate in. So very, very simple, flexible mining plan. Pretty simple stuff. Nothing complicated about it. Process plant. We built this so we can have lots of flexibility. RCF and our lenders are really pleased with this. The oxide plant is completely independent of the sulphide, so we can run the oxide plant at 100% while we build a sulphide plant. So we're not trying to integrate it into the oxide plant. Once we run the sulphide, we can do maintenance on the sulphide and still run the oxide full bore. Very, very flexible operation. And we've laid the sulphide plant out, as you can see here, with lots of space. And why is that? Because we're very, very confident that we will expand that sulphide plant from 2.2 up to 4 million tons per annum very quickly. It would cost another $40 million on top of the 62 that it would cost to build the first sulphide expansion. And we've left space to do that because we have lots of high-grade exploration ore to follow up on, and we're pretty confident we will do that. And I would think that this project will then ramp up to something in the 200,000 ounce per year type of production rate. And here you see why I believe in that. This is a typical pit in the main ore zone, very thick, wide zones in the footwall. The oxide is the light brown on the top. The transition zone is the white part, which is a little harder, only goes into the sulphide feed. It does require a little drill and blast. It's not all free dig and requires some crushing, but it's only processed once we build the sulphide, even though it is oxide. You can see the sulphide pit. It's done at $1,185 gold, under $1,200 an ounce gold. At $1,400 gold, you can see where those pits go to. That is why we were very, very confident that we will be expanding this plant as we go forward. Again, out of cash flow. Again, no dilution to the shareholders. The shareholders are highly leveraged to the gold price here. Exploration upside. We've had some fantastic success over the past 2 to 3 years with discovering higher grade zones. P17, we just announced it yesterday afternoon. We've got the mining permit for it, so that the mining permit will encompass all of that now. That is a high-grade zone. It's over double the grade of the sulfides in the main zone, which is outlined in the sort of blue and red dots there. P17 is not like the main zone. It is a plunging folded unit. We now see more of those, particularly in the hanging wall of the main zone. We've been following up on those. We've had great success with that. We're having a new geological interpretation, and we think that's going to give us a very, very good model going forward for the project itself, and also add to the grade going to the plant, because now we're able to model these zones significantly better than we were 2 to 3 years ago. And you can see some of the results we've had. This is an area that's got between 1 to 2 grams gold in the resource, and you can see the high-grade hits that we've had once we understood that these were folded units, not dipping shear zones like the footwall. In the hanging wall, they're more folded plunging units. You see 175 grams gold, 118 grams gold, 65 grams gold, 102. And this is not free gold. This is all the same type of high-grade hits. And we think this is a great exploration model going forward. And the artisanals who are working there were really pointing these out to us. You can see the sort of white line that they were following. It's following that folded unit. So they didn't know why they were following it, but they knew it was better grade. And that is the vector for us going forward. Oxides, we've got 13 years of oxides in the current mine plan. And then we go into sulphides, but we've got a lot of oxide targets to follow up on outside of the existing reserves. KT to the north, east is fairly well defined. We think there's at least 2 years of oxide feed there. And we put a maiden resource out on that. P13 is a completely separate target, again found by the local artisanals. We followed it up with some scout drilling and some RC drilling in 2018. Very good results, very continuous results. So we think there's another fairly large oxide with likely an underlying sulphide zone there as well for feed to the plant. So we're fairly confident that our oxide resources will extend beyond where we are today. Like any other project, you know, you're building it in a country and a community. You have to have really, really top-notch corporate social policies. With RCF coming on board, we're doing everything to the Equator Principles and IFC and World Bank standards. We've been doing it now for many years. We had an official opening of the relocation villages, which is very unusual, but it tells you the support that we have. 3,000 people attended it, the Prime Minister, the President, Minister of Mines, Minister of Environment, etc. So that was a real endorsement of the quality of work that we're doing in the local communities. These are the villages that we've been building, 7 of them. There are 5 of them all complete, 2 of them just about to be finished here. You can see the current houses that are living in the bottom left. You can see the new houses that we're building. Roads are in place, water's in place, sewage and septic systems in place, churches, mosques, schools, clinics, all built, ready to go. And the communities are very excited about this going forward. And they will rent some of these houses also to the local contractors as we build and operate this mine. So you've got a ready-built camp for most of your employees in and around the project itself. Livelihood Restoration, those have been going on for several years. We've been reclaiming ground that the locals have been, when they chop down trees for firewood and for cooking, the land becomes barren. We've reclaimed that now highly successfully, doing shea butter production. We've been doing sesame, spices, developing market gardens, weaving. Weaving is really for the clothing for the employees on the project. The local communities will be making those. We'll not be buying those uniforms outside of the communities. Very successful. We've been training people for building houses. Most of the houses that were built for the villages were built by the local communities. So where are we at? 250 million shares out, market cap of about 200 million Canadian, maybe 240. We've got about 22 million Canadian in the till, about 17 US. That will get us to the end of the year. We do have the who's who of mining funds in the project: RCF, Sun Valley, Mason Hill, VanEck, Chorus, which are a local African fund, all of whom have visited the project. Management, we own 5.6%. We recently had CIBC, one of the preeminent Canadian banks, launch coverage on us. Raymond James just recently launched coverage on it. We expect a number of others. As a junior single asset development company, to have 5 major analysts covering us is quite the coup, but it's because of the value proposition of the project going forward. You know, we think we're in a very attractive point. You know, we're in a country that's got a very successful track record of building mines. We're one of the few projects that needs to be can be permitted here and built. And at the current gold price, I think we're probably at 100% IRR at $1,900 gold. But even at $1,500 gold, we're at 52% IRR, $520 million US after tax NAV. So a real attractive a project to get involved in with a team that knows what they're doing. So that's where we're at. I'll open it for questions and go from there. Who owns the other 10% of Bomboré? That's owned by the government. They are a free carried. Obviously, we have a lot of project loans, so they only get free carried once we pay off all of that. So it's not a true 10%. It's probably about 95% of the project. And so the government are a partner, and they're a partner in every other project in the country. The biggest risk to the project? Oh boy, that's a great question. We've done a lot of with RCF and with our banks. We have a very detailed risk register. Always, it's around security and making sure your supply chain is in good standing, etc. I think we've done a great job of that. I don't think there's a capital risk to the project based on the projects that have been built in country. I think the biggest risk we have is maybe getting bought out too soon and too cheaply. But thankfully, we're all big shareholders. Are there synergies to be gained through a combination with West African? I would think so, absolutely. There would be. I think we would have to build ours. I mean, we want to build ours, and then they'll be have built theirs, and then do like what Newmont and Barrick did in the area. So I think absolutely there would be good synergies going forward, and we've got a very good relationship with West African. So I'm sure we'll explore those, in that regard. Local talent and infrastructure. Oh my goodness, great! We have very few expats in place. We mostly have local people, highly trained. Our geologists and mining guys are as good as anybody you find in Canada. Same with the finance guys. Same with the construction, tank welding, tank fabrication, steel erection, concrete pouring. All local talents. Major milestones over the next 12 months will be restarting and finalizing the RAP, which is the resettlement. We'll be putting the project finance in place, which is very well advanced, and starting the construction in late Q4, early Q1 of next year. That will be the key milestones that we will have. Question here about SEMAFO employees killed. That was a very tragic incident. No similar security risk to Orezone. They were on a dirt road that's 150 kilometers long out in the far east of the country, highly vegetated in terms of where people can hide. Nothing has happened since, and SEMAFO have since been taken over by Endeavour. I think you're going to see some announcements here about that mine reopening very soon. Nobody claimed responsibility for that, so that I don't think that was, from what we understand, that was something that was done not quite to plan. There's been no mines attacked on in the country. There has been no supply chains attacked in the country. There's been 2 mines built in the past 2 years. So risk is, fairly well managed in country in that regard. What is RCF? RCF are a very, very large private equity group, totally focused on mining. Billion-dollar funds invest in management and projects all over the world. Do exceptional amount of due diligence. They did 10 weeks due diligence on our project. We were happy for them to do it. They put 2 members of the technical team on the board. We have monthly meetings with them on both the project steering, which is the project development, and on the environmental social side. They bring a lot of rigor to it. They've been involved in some of the most successful projects worldwide. So very, very experienced group of people. I don't think I've got any further questions, so I think we can wrap up. I hope you got a good taste for the project and the team and what we plan to do over the next 12 to 18 months. We're really excited about it. It's going to be a very exciting time in a very, very a robust bullion market, and so I think you'll see a lot of share price improvement over the next 12 to 18 months as we develop this project. Okay, and I'd like to thank the OTC for giving us this opportunity to present the company and the project.